Okay, guys, how you doing today? Trust you are doing good. So, on this model, we'll be talking about Japanese candlesticks, guys. By now, you should be a little bit familiar with the term candlestick. It's because, like, as we all know, it's a form of technical analysis, most especially our MT4 trading platform. In fact, our trading view, whatever charting platform, is being represented in candlesticks, guys. So, would want to, a lot of you might be wondering, what exactly is this candlestick? We've been hearing this term candlestick. So, guys, today we are going to do a breakdown of the candlestick. I will try as much as possible to make this class not too lengthy, but I pray God will help us. Amen. So, guys, about Japanese candlestick. Japanese candlestick was introduced in Japan, like the name signifies Japanese. So it was introduced in Japan rather. It was an old school pattern version of technical analysis to trade rice. So basically the Japanese had this candlestick pattern which they basically use in trading rice. Like the way we trade gold, you can trade Facebook, you can trade Coca-Cola. So this was their huge secret, you understand? And then this system was discovered by Steve Nielsen. He learned it from a fellow Japanese broker. You understand? It's just like when you have a business partner and then he's doing something you don't know and the stuff is making sense. Why not apply it to your own business partner? You understand? Then adopt that method. So Steve Nielsen he learned it from his fellow broker. Then he had to make research on Japanese candlestick. He studied it. He ate it. When they said somebody ate something and then became that. So that was what Steve Nielsen did, and it became the Mr. Candlestick. As a matter of fact, if not because of Steve Nielsen, we wouldn't have known about candlestick. So he was the one that had to research, and then he taught the method. So if you are hearing about the term Japanese candlestick, we should know that the author and the finisher of candlestick was Steve Nielsen. You understand? So guys, not to waste our time, what is Japanese candlestick? Okay. Like I've said earlier, it is just the representation of our price. It's what we use to represent our price. In fact, everything in the market basically is being represented in the Japanese candlestick. Although we have the Ichimoku candlestick, some different kind of patterns of candlestick chart. You could choose to use the bar chart and even the line chart. But as we all know, basically the most adopted way of trading by technical analysts, that's technical traders, is majorly the Japanese candlesticks. And like we know, Japanese candlestick could basically be used in any time frame, varies from the weekly, monthly, daily, minutes, 15 minutes, 1 minute, 5 minutes, and the likes of that. Basically, it could be used in any time frame. If you go to M15, you would see the 15 minutes candle. If you go to M1, you see the M1 candle, even the daily. So the only difference is if it's in 15 minutes, it takes 15 minutes to form one candle. So for one candle to form in M15, it's going to take 15 minutes. For one candle to form on a daily basis, it's going to take 24 hours, stuff like that. And these are the important characteristics of a candlestick. When it is being formed, it's when a candlestick is being formed, it forms in using this pattern. We have the open, we have the high, we have the low, and we have the close. Okay, guys. So now, with these four things, I'm going to be explaining some things, and then we'll go to a diagram. So, guys, when we are talking about the open, for example, if I am on my M15 chart, once every 15 minutes, a new candle forms. So the time in which the candle forms and the pattern the candle forms is going to determine the open. So when we are talking about open, it's just like basically a new candle is forming, and it's either it's going to be forming to the bullish side, that's to the upside, or it's going to be forming to the downside. You understand? And then when a candle forms, the market consists of buyers and sellers. So sometimes the sellers seems to either push the price down or push it up. In as much as immediately it forms, then it start pushing it down. Then we have stuffs like wick. You understand? That's why you see wicks in candles. That's like the struggle between the buyers and the seller. Then coming to the aspect of the low, just trying to bring this down to a layman understanding. The low is talking about the lowest point the candle got to before it formed. So sometimes you might see a bullish candle, something like this, and then there's a kind of a wick here. Excuse me. There's a kind of a wick here and a wick here, guys. So when we are talking about this stuff, this is the lowest point. This particular candle might be here, might be this zone, but then when the sellers push it up to this zone, the candle closed here. So once it's 15 minutes, a new candle starts forming again, but then it's not yet complete until the 15 minutes is over, for example. So the close is when the particular candle got exhausted and then a new candle forms. So guys, let's just go directly into the chart so that into the I prepared a form of okay guys. So like take a look at this now, guys. Take a look at this. We had the high of the candle. You see, this is a bearish candle. A bearish candle. Why is it bearish? Because the opening was what? From the downside. It's opened from the downside. That it's opened going down, and then it started going down and formed a low. Now, why did it form a low? Because when it got to this zone, the buyers pushed this candle up a little bit. So when the buyers pushed this candle up a little bit, you understand, and then there was a struggle here, the candle kept going up, and it got to this high, this particular zone. It was full at that particular zone, guys. But then the struggle still brought it down again. So when it was like the time of the candle, maybe it was 15 minutes, this candle closed at this point. Same goes to this. So when we are talking about the bearish candle, okay, it opened at the top. So it was opening and then it was going up. But then the sellers came in and then it got to this high, they pushed the price down. It formed the body, it went down the low, that it was even forming a wick, and when it got to this particular low, this low here, and then when the sellers came again, then the buyers, they were able to push the price and then it closed at this zone. So closing means this was the zone, that particular candle. The time of this the time, maybe it's a 15-minute candle. So once it's 15 minutes, a new candle forms, guys. So that is why it is called the close. So let me see if I could just sharply go into the chat and then just share something with us for more understanding. This module is going to be a very long one. It's going to be a long one. So guys, okay, sorry about that. Since it's still loading, let's just move to something else and then we'll come back here. But in the meantime, am I still sharing my screen? Okay. Then in the meantime, there are some things I want us to note about the Japanese candlesticks. Very, very important key stuff. In fact, excuse me, things to note, you understand. The longer the body, say number one. The longer the body, the more buying or selling. I'll explain it, guys. Please just keep with me. Short bodies. The short bodies rise to selling or buying activities. Then the third one, And the third one is the week signifies that the price, the buyers and the seller came and drove the price up or down. That's just basically like the opening or the closing. It's going to leave a weak rejection. So let's see if the stuff I was talking about is loaded. So the chart. Okay, guys, just yeah. I want us to take notes. Just take a look at this now. This is a 1 hour time frame. If you notice this particular candle is still forming, and then it remained how many minutes here? 8 minutes 47 seconds for it to finish forming. So you see the candle is still going down, and then there's a little bit of a struggle. It's H1. Let me go to a smaller time frame so we can really see what I'm talking about, guys. Cool. So this candle started forming here. Let me zoom it out because I want to be so really practical in this class. Yeah, cool. So I believe every one of us can see it. Now this candle here was a 15-minute candle. When it opened, it went up to this week, but then the sellers pushed it down, and then it started coming down and come to this side again. The buyers push it. If you notice, the candle is going up, and as you can see, this is 7 minutes. So now we've gotten a high, we've gotten a open, and we've got the body, but then we haven't gotten a close because this candle is still forming, guys. This candle is still forming. So this is just basically it. If we go to the 5-minute time frame, it's still going to be the same thing. If we go to the 5-minute time frame, you see, okay, just look. Oh, thank God I did these videos. Just look at this now. It's remaining 2 minutes before this candle finished forming. And then it started here. This was the open. And then the buyers push it up. You understand? Now it's still forming. It's forming the high. You understand? We haven't, this is the high, the open, the high. And then it will come down now. Probably get to this one and form a kind of a wick. And then the sellers will push it down a little bit. And then we'll have our close. And then the body. So guys, this is just how the candle forms. So this is basically one of the things you just take note of. You understand? Although we might not be necessarily making use of it in our charting experience, but then we just really need to. So the longer the body is, the more intense buying and selling pressure. The shorter the body, it implies little selling or buying activities in the market. And then the week, when there's a lot of week, it basically signifies that okay, the sellers are trying to push it down. So this is just basically okay, the long body, guys. This is a long body. This is a long body candle. I'm coming. I want to mark this stuff. Okay, so we have the long body. See how big it is, and then we have the I'm coming out to fix my mouse. Yeah. Cool. And then we have the short body. The long body, then we have the short body. We have the short body. So this is just how the candle forms. I'll still go to the chart and explain to us. So when it's a long body, that means okay, the buying pressure is much. And then we also have the one when we are talking about shadows. Shadows are basically the weak. And this is it. This candle started full. It started full, but then the buyers pushed the price up, and then it formed a wick, and then gave us more. So that means the buying pressure here, the buyers are getting, the sellers are getting weak, rather the buyers are taking over. You understand? So the long shadows, though we are going to be talking about the types of candlestick patterns and the ones you should look out for, most importantly, but just for us to have a glimpse of what we want to do and then have a deep understanding about this. So guys, let's just take a few minutes. I love being practical. Let's go to the chat and then let's just do this. Okay. Now, just look at this long body candle. This big one. That's the blue one rather. Just take a look at this one too. Just look at the selling. You can see when the body is big. After those big candles form, then you just discover that the buyer started pushing the price down. The sellers rather, and then look at this one. Look at these big candles. You see the price boom to the upside. So it's just, although you are not to trade or look for this stuff anywhere, no, that's not it. But just for you to understand what we are talking about, what I'm talking about, that's why I'm giving us different examples as these guys. So I wouldn't want to waste our time. So I believe with this, you should be able to understand when we are talking about the law of a candlestick, the open and all of that, you should be familiar with those terms by now because I've tried to break it down to a layman's understanding. In fact, explanations like this majorly are not really, they are not the, it's not being explained in depth, you understand, the way I'm trying to do it, but I just want all of us, to get the understanding. So basic candlestick patterns, we'll be talking about, I think, around five or thereabouts. We have the spinning tops, or the spinning tops, yes, tops, all joint tops. So let me just type this out. Uh, Candlestick. Instead of typing it, I should just talk about it. Then we can take notes from it. So when we are talking about the spinning tops, they are candlesticks with a long upper shadow or long lower shadow with small real bodies. And this candlestick, most times they indicate indecision between the buyers and the sellers, guys. So basically, when we are talking about the spinning tops, okay, I should just share this. When we are talking about the spinning tops, basically, guys, we are just talking about candles that they are indecisions candles. When we are talking about indecisions, this candle signifies this market is not showing whether it's going to buy or it's going to sell. The struggle is too much, so we can't say this is it, guys. We can't say this is it. So this candle always have small bodies, and these are the bodies. You understand? Small bodies, but then the weak, the shadows, the weak are known as the shadows, like I said. So then the shadows is almost having, it's almost going to be like a cross. So most of the times, these candles, they are being, if you want to be looking out for candles like this, you can't trade them alone. You have to look for them in specific zones. And when I'm talking about specific zones, I mean in zones like in a support and resistance zone, they are just extra confirmation candles. They are not basically meant to be traded alone, guys. So it's not as if you go to anywhere in the market, in the chart, and then start looking for spinning top. You understand? So I'm trying to look for. Okay, just take a look at something like this. Look at this one. This price was in a kind of a key level zone. If we would scroll back, this zone should be a valid zone. And then, guys, when price, oh, sorry, you see, where did I see that stuff? Okay, this is it. When price was showing a candle like this, the buyers, the sellers were coming, the candlesticks were rejecting. And after this, okay, we kind of have a move to the downside and then it still came back. So it was not like a valid move. So we can't really tell, okay, if it is the buyers, maybe the buyers are taking control. And look, we have candles like this. You see, we have something, we have two here also. So if you notice, the movement was a little bit choppy. We have this kind of a movement before the final movement to the upside. So these candles, they are basically indecision candles, you understand? So when you are seeing it, if the market is on a bullish trend, you should be expecting a bearish move. If the market is in a bearish trend, you should be expecting a bullish move with other confluences, guys. So it's not meant to be traded on. It is not meant to be traded alone. So also, another kind of candlesticks, we have the doji. The doji candles, they have the same open and close price, or at least almost like the same body. Then the doji candlestick, they signify indecision also, or a struggle between the buyers and the sellers in the market. Guys, these doji candles, they are indecision candles, just like the spinning tops. And we have like four different type of doji. We have the long leg doji, we have the dragonfly doji, the gravestone doji, and then the four price doji. So these, sometimes most of the doji candles, they are not really familiar, but the ones you'll be seeing mostly is this long leg and sometimes this dragonfly with a little body. These two most times are not really conversant or really common in the market, guys. So basically, what I'm just saying is this doji candle signifies indecision. So probably I'm seeing this doji candle, I'll be expecting to there should be an reversal in the market trend. Okay, so just for example, let me just give out examples. It seems it's very familiar in this pair. We can see something like this. Just take a look at this one. Then we have another one. We have another one here. Yeah, we have another one here. Okay, guys. Let's see. You know, it's not something that you just pick anywhere. You have to like find them around key zones, key levels. Oh, fantastic. Look at this one here also. Guys, this is like a long leg doji. Yeah, around that zone. So these are zones, these are candlesticks that you find when they are indecision. So sometimes you might see multiple, like series of doji candles forming. Just for example, take a look at from these zones. There were a lot of indecision candles here forming these here. These are candlesticks that signifies they signify a reversal. They signify a reversal in the market. When you are seeing the Amma candle, it has a long wick. Yeah, like you can see here, it has a long wick. Yeah, and then a big head, and then the hanging man also. And these are take note of the pattern, the way it is being formed. Even in the uptrend, it is formed like this, and in the downtrend, it is formed like this long wick and then a head. Understand? Some scenarios might have a little weak at the top, while some might not have it. So let's just check the chart again. So we'll see examples. Oh, okay, this is not an angry man. This is a shooting star. Okay, okay, guys, cool. So in fact, look at this key zone. I think this is an inverted. I'm marking the shooting star. Sorry. Yeah. So let's see. We're not getting anyone yet. It's doing something new. Let you see. Okay, so I'll just give this one. Okay, like look at something like this. You see, boom, and then we started experiencing the movement to the upside, guys. So I don't really want to go far. I don't really want to go far, but these are not just the only things you will just look out for. Oh, fantastic. Just take a look at this one. So guys, these are recent charts. So it's not as if we are teaching you some things that are not relevant to the recent chart or whatever is happening recently. So guys, like as you can see, this was an Angie man, and then in the uptrend, you want to look for the hammer on and then the Angie man. So then we also have a kind of an opposite to these ones, and they are the inverted hammer and shooting star. Now, when we are talking about inverted, when something is the other way around, like the hammer and the hanging man were standing straight, guys. Established straight. But then the inverted are standing upside down. And most times this inverted is always familiar. Like we tend to see more of these patterns. So there are also candles that they indicate reversals in the market. They indicate, indecisions, like okay, when you have your conferences like your trend line or your support and resistance, supply and demand zone, you want to add a candlestick confirmation as part of your entry. So okay, let's take a look at this, for example. I've been seeing some series of shooting star. Okay, here we have a shooting star, guys. Boom. Here we have our inverted armor. This is very, very popular. Here we also have a shooting star. It doesn't, you see the width, and then we have an inverted armor. If you tend to start looking, and then you see we have more of this. Even at this zone, we had the hammer candle here. I didn't even take note. Yeah. But this is not the one we are looking for yet, though. Yeah, so basically these examples should do. So we also have the fifth candlestick pattern we'll be talking about is We have the engulfing candle. We have the bullish engulfing candle. These are also patterns that signifies reversal in the forex market. Excuse me. They signify reversals in the forex market. And when we are talking about engulfing is like a candle that seems to cover the previous candle. So guys, we have the bullish engulfing where the candle is being engulfed to the upside when it's coming on a bearish trend, and then a big bullish candle just engulf it, and then when it's coming on a bullish trend, a big bearish candle just engulfs it. So basically, let's go into the chart. This is very, very familiar. In fact, in GBP USD, that's my peer. You see a lot of these candles. You see a lot of these candles in specific zones. Just take a look at this candle. You see how this blue one engulfed it? It's engulfed. Okay, look at this one also. It got engulfed. Okay, this one is almost true that got engulfed it. But then if you take a look at this one also, you can see this big candle, the way it engulfed the both of them. Sorry, my stuff is not straight. Okay. Okay. Look at this engulfing candle also. So we can, okay, these are recent charts. Okay. So just look at this one that is forming now, guys. See how it's like a spinning top, kind of an engulfing. And look at the big engulfing candle that's formed after it. So these are basically patterns that you can find on different time frames, as well as even your H1. Most important, they are even stronger on higher time frames, and you tend to see them more. Just take a look at this one. See the way it engulfed it. Take a look at this one. See the way it engulfed it, even for me, and a amount candle. Look at this big candle. Sorry, that's too big. See the way it engulfed it, guys. So basically, these are some of the candlesticks pattern that we look for in key levels. Might be your area of support. Just make sure it's around your confluences, guys. It's around your confluences. So let's go back. These are just the basic 5 patterns, we'll be talking about. And I didn't type them because, it's going to take a lot of time typing. So it's just important I explain. So some things I want you to note before we end this session. You don't find meaning to all the candlesticks on your chart. And what I mean by that is you don't just look for any candlestick. You'll be looking for spinning tops anywhere. You'll be looking for engulfing candle for inverted hammer anywhere. No, these are meant to be seen at specific zones, and they are not meant to. So you cannot trade candlestick patterns alone. They are not meant to be traded alone. They have to be traded with confluences, with either a buy confluence, a sell confluence, but it is not meant to be traded alone, guys. Don't base your entry on only candlestick patterns. Like I said, not only candlestick that you just enter the market and I'm seeing spinning top anywhere I'm buying, I'm seeing trade engulfing, I'm selling. No, guys, you lose your money that way. You have to have specific zones and key areas you want to buy from. And then it is also important that candlesticks are great and sweet. In fact, they are lovely. They are babies. They are like the love of my life. Yeah, presently. Jesus is the love of my life right now. But then they are still part of the love of my life. When you see a candlestick projection, a pattern that you've been looking out for, it gives you more confidence in the trade added with your confluences. So guys, we'll be ending the session here. I'm kind of rushing in out to cut some things off to just do this record, guys. So make sure you have a lovely, lovely, lovely day. I'll be going now, guys. Bye. I love you so much. Bye, guys.